Thursday, June 20th, 2019, Maneco 64, home of alternative economics and contrarian views. So gold has finally broken out through that key resistance at 1375. I had spoken a couple of weeks ago also about 1380, how it was a key Fibonacci level, like a golden mean 38.2 retracement. Since we hit a high in 2011 and the low in December of 2015, does that mean that everything is great and I'm going to put my feet up? No, I'm going to keep exposing the central banks, and I think this has everything to do with central banks. I guess a lot of people look at gold just as a normal commodity, even though, of course, it is a commodity, but more importantly, it's a monetary commodity, just like silver, even though silver has a lot more industrial use than gold. So late yesterday, on the close of the futures, gold futures in New York, I noticed that gold actually rallied quite strongly from around 1352, 53, all the way to 1360. And I was surprised because usually on a day of a Fed decision, a press conference, and gold actually goes down, or if it goes up, they smash it down at the end. But it actually went up, and I thought, wow, this is strange. This is quite encouraging. And then I woke up earlier today, and I turned on my app on my phone and for my IG account, and I saw that the Dow was up 100, and I thought, oh, wow, gold is probably down. So I went to my my page and actually saw gold was at up about 20 at 1380, and then I checked the high, 1395. So it's a huge move. What does this all mean? I think it means that investors and maybe also even sovereign countries are starting to realize that the central bankers, especially the Federal Reserve, ECB, Bank of England, Bank of Japan, they have no way out. And the people who have been saying, you know, like me, like Jim Sinclair, who've been saying they would never be able to normalize policy, that it would be QE to infinity, they have been right. Of course, the Fed tried to normalize things again the last few years, but they couldn't. They realized very quickly if they try to normalize rates and monetary policy, everything would collapse. And that's why Jay Powell now is calling, the extreme or, their policy, monetary policy that they've had for the last 11 years. That's why he's calling it the new normal, so to speak, now. And the other thing that is, I think, is making traders and investors realize, and I'm not sure about the algorithms, but is that it looks really stupid for central banks to be talking about cutting rates when unemployment is supposedly, at 50-year lows, when the stock market has gone from, 17,000 3 years ago to almost 27,000 now. We are at all-time highs. And they're talking about cutting rates. It just goes to show that they'll never be able to normalize policy. And I think it will end in the destruction of these currencies. Not the dollar against the euro or the pound. It's going to be against real things. And precious metals, of course, gold particularly, is a monetary real thing, right? The fiat paper money that we have, they can create it out of thin air, and they're going to keep creating it out of thin air. So I tweeted last night because I listened a little bit to the Jay Powell press conference, and I told myself, how can people still, trust this guy or the institution? I thought it was quite comical. He's really losing it. He Alan Greenspan, I'm not defending Alan Greenspan. Alan Greenspan was a professional next to Jay Powell, but I don't even think Alan Greenspan could keep things going without looking stupid. Fed cutting rates with where things are. I guess the bond markets don't buy it either. I mean, yields even dropped overnight below 2%, the 10-year yield. So let's quickly look at the markets here. It's 8 a.m. London time. And then I'm going to look also at an article I saw yesterday in the Daily Telegraph about central banking that I thought it was really interesting. So where are we right now? Spot gold, 1383.40. It's up 22. I mean, I don't remember the last time it was up that much. I think you need to go back about 8-9 years, or 1.7%. 1383. The high's been 1395, as I said. So does this mean that I'm encouraging people to buy gold to make money as a trade? No, my philosophy hasn't changed. Gold is a savings instrument. It's insurance against monetary mayhem. I personally try to buy whenever if I can get spare fiat money. It's hard saving these days. And not try to dollar cost average, physical gold and silver. But I'm not trading it. You can try to trade it, but I don't recommend it. It just gives the manipulators more ammunition if you trade the paper, the futures, the ETFs. So try to get physical. And believe me, these prices, the premium for buying gold is going to shoot through the roof. So if you're looking to buy gold, I think you need to, I'm not saying you should rush out there and do it now, but think about that. Before we are at 1,500 or so in gold, because right now I think it's going to be a quick move. It's not going to take another 3 years for us to move another $100, in my opinion. So there you go. Silver is lagging gold percentage-wise, but it's starting to move. So we're at 1532, up 16 or 1%. Gold is up 1.6. Range has been 1511 to 1540. So before I go into the stock market and the currencies, I'll just show you the chart of gold. There's the weekly one. You see the 1375 there. In July 2016. We're clearly breaking out of that now. We're making a new high. The retracement, 1380, 38.2 retracement of the correction that we had from 2011 to 2015, December 2015. So now the next target, I guess, is 1483, which is the 50% retracement. And then you have some lows from around December 2011, May 2012 there, which is around 1523. So that will be a next big area of resistance there for gold. Am I saying it's going there tomorrow, next week? No, I'm just talking more long term. So the chart is silver. Yeah, silver looks good, but as you can see, back in 2016, silver is at 21, and now it's still at 15. So hopefully silver will catch up. Usually silver leads the way, and right now gold is leading the way. That is telling me that this is not about, this is about, I think, worries and loss of confidence in the central banks. It's not about a commodity move. This is more of a monetary move, but we'll see. I still have silver as well. So it's up to you to decide whether you should load up more on silver or gold. It's not for me to decide that. So back to the markets. Yeah, the Dow is up 140, up 0.5%. Yeah, I think we're probably going to make new highs. They're going to hyperinflate this this baby. So we're at 26,640, up 0.5% or 140. S&P is up 20, up 2/3%, 2944. Nasdaq 100 is up 1%, 77 points. So yeah, the dollar's losing ground against the currencies here today, the fiat currencies. Dollar's down just under 0.5% against the pound, the euro, the yen, and the Chinese yuan as well. But the dollar's down 1.6 versus gold. So as I said, they're all gonna sink versus gold. So don't be fooled. Don't hedge your dollar exposure by buying fiat currencies. You know, stick to precious metals. So right now, yeah, cable is up 53 pips or 0.42%, 126.93. The euro is at 112.72, up 0.42. Dollar is down 50 pips against the yen at 107.60, and it's down 0.4% against the yuan at 686.66. I wonder if Trump is going to have a go at Powell for manipulating the dollar today. He had a go at Draghi the other day. He said Draghi is, announcing stimulus and trying to manipulate the euro lower. I wonder if he's going to say anything about Powell today. So anyway, crude oil. Yeah, crude oil is up strongly. WTI is up 3%, 55.56. Brent crude is up 2.85% at 62.94. So what's the ramifications for the general public of this? Well, I think we know already that the cost of living has been rising for many years, even though we're told by the central bankers and governments that there's no inflation. Hell, they're scared that there's not enough inflation, but it's going to get even worse now in terms of, in terms of the rising cost of living. And some people will have no protection against this. I talk about that you need to buy gold and silver to protect yourself. Some people can't even make ends meet, and their wages and might go up a little bit, but not that much. And I think things that you really need, things that are really necessary, unfortunately, they're not going to go up. The currencies are going down. You have to understand that. A lot of people say, oh, this always goes up, things always go up. And I try to tell people, when I listen to people, sometimes I'm out shopping and they're complaining and I start talking to them. I say to them, no, things don't go up. It's the money that's going down. So that's what's going on right now. Bond markets, as I said, they're not, their 10-year yield is now down 4 basis points at 1.987. It'll be interesting to see if, the stock market can keep this up. Who's to say that we could see new highs? I don't know. I think we will, because the Fed is just going to keep, it's not even a punch bowl anymore. It's a swimming pool they have. And they're filling up an Olympic swimming pool instead of a punch bowl. And I don't think they plan draining that swimming pool anytime soon. Before I finish, just wanted to tell you about this article I read yesterday. It's in the Telegraph by Ambrose Evans Pritchard, and he says, Trump risks turning U.S. into third world country, in quotes, right here. And I'll just summarize it. Just wanted to say that I'm looking at this, not because I want to talk about Trump or say what Trump is doing or what Trump is not doing. It's just that I want to look at what this central banker who said this, the fallacy that he, he has, that central banks are a good thing. So this is Stanley Fischer. He used to be Janet Yellen's deputy, the Fed chairwoman, who said that normalizing policy and unwinding back the balance sheet would be like watching paint dry, right? So Stanley Fischer, he was also governor of the Bank of Israel. He's saying now that Trump, by challenging the Fed's independence, is going to turn the U.S. into a third world country. Oh, well, I would recommend Mr. Fisher to look at history, how since the inception of the Federal Reserve, the dollar has lost 97% of its value, and that's what's killing the middle class in the United States. That's what is hollowing out manufacturing in the States, and that's what's, that inflation is what's turning America into a third world country. So it's the Federal Reserve itself, Mr. Fisher. So wake up, do a little bit of history, and and stop saying rubbish. So anyway, if you enjoyed this video, make sure you hit the like button. Make sure you share it far and wide if you think others would enjoy this kind of content. And you can also follow me on Twitter, Steemit, and on DTube. I wish you all a great day. Take care. Bye.